What's the biggest secret to building wealth? Warren Buffett, one of the richest and most respected investors in history, has turned simple investing principles into an empire. Today, I'll share 5 timeless lessons from the Oracle of Omaha that beginners can use to start building their own financial future. The last one might completely change how you think about money. Before we break down these secrets, it's crucial to understand Buffett's philosophy. He focuses on simplicity, patience, and investing in things he truly understands. He often says, you don't have to be a genius to invest well, but you must have the temperament to control the urges that get other people into trouble. His success isn't built on complex strategies. It's about discipline and making decisions based on long-term value. Buffett's first rule of investing is to stick with what you understand. He once said, never invest in a business you cannot understand. For beginners, this means avoiding the temptation to jump into industries you know little about, like cryptocurrency or biotech, just because they seem trendy. Instead, look around at the products and services you use daily. Are there companies behind them with a solid reputation and a competitive edge? Buffett's own portfolio includes companies like Coca-Cola and Apple, brands most people understand and trust. The takeaway here, you don't need to chase complicated opportunities. Start with businesses that make sense to you. One of Buffett's most famous principles is patience. He often says, our favorite holding period is forever. This doesn't mean you'll never sell an investment, but it emphasizes the importance of thinking long-term. Successful investing isn't about quick wins. It's about allowing your money to grow over decades through the power of compounding. Imagine this. If you invest $10,000 in a solid stock that grows by 10% annually, in 30 years it's worth over $175,000. But here's the catch. Frequent buying and selling can kill your returns through taxes and fees. Buffett's advice is clear. Let time and compounding work their magic. Here's why these principles are so important. Investing isn't about timing the market or following the latest trends. It's about consistency and discipline. And speaking of discipline, Buffett's next secret could save you thousands over your investing lifetime. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. One of Buffett's biggest criticisms of Wall Street is its high fees. Whether it's actively managed funds or frequent trading, fees can quietly eat away at your returns. His advice? Keep costs low. This is why Buffett recommends low-cost index funds for most investors. These funds track the overall market, offering diversification and solid returns without the high management fees. For beginners, an S&P 500 index fund is a great starting point, as it gives you exposure to 500 of the largest US companies. Buffett himself has instructed his estate to invest 90% of his wealth into index funds for his family after his passing, a testament to his belief in their value. One of Buffett's most quoted pieces of advice is be fearful when others are greedy and greedy when others are fearful. This speaks to the importance of staying level-headed during market fluctuations. When markets are booming, many investors get caught up in the excitement and overpay for stocks. Conversely, during downturns, they panic and sell. Buffett does the opposite. He sees market downturns as opportunities to buy great companies at a discount. For beginners, this means keeping a calm, rational perspective. Instead of following the crowd, focus on the underlying value of your investments. Remember, the best deals are often found when others are too afraid to act. Buffett's final secret isn't about stocks or strategies, it's about you. He often says, the best investment you can make is in yourself. This means continuously improving your financial knowledge and skills. Whether it's reading books like The Intelligent Investor by Benjamin Graham or simply understanding basic financial literacy, the more informed you are, the better decisions you'll make. Buffett is a voracious reader, spending hours each day consuming information. For beginners, start by dedicating just 20 minutes a day to learning about investing. Over time, that knowledge will compound just like your investments. Warren Buffett's investing principles might sound simple, but they've built one of the largest fortunes in history. His focus on understanding businesses, thinking long-term, minimizing costs, staying calm during market swings, and investing in personal growth offers a roadmap for anyone starting their investing journey. The beauty of his approach is that it's accessible to everyone, regardless of how much money you're starting with. So, where will you begin? What part of Buffett's strategy resonates with you the most? Share your thoughts in the comments, and if this video gave you value, subscribe and like for more actionable investing tips. Thanks for watching, and I'll see you in the next one.